Hello, everybody. Thank you for joining me. I'm Ken Dahl, and we got a little fireside chat going on here with my good friend Graham Bergsma, one of Canada's top insurance experts. So we're just going to have a conversation and talk about whatever kind of jumps into our head, and hopefully that'll provide some benefit and you'll enjoy it. So. Thanks for joining me, Graham. Appreciate it. And yeah, just jump in with whatever you think is kind of the maybe a hot topic today, or what you would like people to know about life insurance that maybe they don't know at this point. Or
Yeah, sure. I mean, thanks for having me, Ken. It was awesome to get to meet you in our little think tank group that we're both a part of, and it's been awesome. And you trying to put this on is pretty cool. To me, there's not enough, just information that's out there. There's always some sales angle to everything that goes on, and I think there's a lot out there that people can utilize, and just knowing a little bit more about it goes a long way. So yeah, I know we had tossed around a couple things, and I think one of the good starting points was the difference between term insurance and permanent insurance was something I think you thought your people would want to know a little bit more about. So it's a great place to start if you want to have that conversation.
yeah, that sounds great, and that's a question that I get quite often. And I know people, if they're Googling, they're gonna run into that kind of situation,
Oh,
and
Google.
yeah, and it's sometimes it's funny because it frames it in people's mind, but it's not always the best way to think about it. But I think both term insurance and permanent insurance, they both have their place. They're different, but they cover different needs. But I think they're both awesome things that people should be taking advantage of, and try not to think about one being better than the other. It's really what works best for you in your situation.
Yeah, I think you're talking about Googling stuff, and it's like when WebMD came out, and everybody would look up on WebMD, and it didn't matter what you had, you were dying.
Yeah,
Like that was it. You
yeah.
were you were you were toast. Like it made people. It was just basically fear mongering. It scared a lot of people. But when you Google stuff online, you generally get like one end of the spectrum. Like somebody really thinks that term is the only thing you should have and invest the rest, or somebody else thinks if you're not getting permanent, you're renting instead of owning, and you're missing out on all this stuff. And I think that's the biggest problem with it for people is that it's like these two factions like having a war against each other. Um, and one, they both do different things very well, but it also doesn't have to be one or the other. I think the best plans are ones that incorporate both because they both accomplish different things. And it's figuring out, okay, this one does this one does this. How do I need what this does? Yes. Do I need what this does? No. Or maybe yes. Okay, how much of this do I need? How much of this do I need? And I think a good advisor is literally just sitting down with somebody and getting them to have a conversation with them, but almost with themselves about like, okay, what does my life look like now? What do I want my life to look like and the life of my family to look like for the next 20, 30, 40, 50 years? And then you kind of reverse engineer it and go back and go, okay, if this is what you want things to look like for the next 40 years, what can we put in place that makes that as likely as possible to happen? And mitigate some of those
Yeah.
risks. Because insurance, for most people, there are some other, tax advantage pieces that happen, but we can talk about those on a later date. But for most people, insurance is insurance. It's covering off risks, and you hope you never need it because that means you're dead. But if you do, you want to leave behind the best possible opportunities and alternatives for your family and the people that you care about.
Yeah, absolutely. Yeah, that's what it's all about. It's what works for you, what's best for your situation, and as you mentioned, there's different products and different insurance products that solve different problems or provide solutions for different situations,
Yeah.
and that's just a great way to have it. And I've always liked that, and I think it opens up a great conversation with people because they're kind of approaching it they kind of from a black and white sense. It's one or the other, and that's not the way to think about it at all. And if you're dealing with a good insurance agent, they're not gonna they're gonna ask you some questions, and they're gonna figure out what you need and what's best for you and what you can afford. and then set you up properly for for what you need in your life now, and possibly lay the groundwork for future needs as you go along. So it's very flexible, and I
Yeah.
think that's one of the messages is it's flexible, and you can build it however you want it. So just like a lot of other things in life, it's you use it for what's best for you.
Yeah, and I mean I look at it kind of like when we're all familiar with the idea of diversifying your portfolio, right? Like if you're going to go and invest in your finance plans, you're not saying, well, I'm going to put all my money into CN Rail or Apple or Google or one stock, right? You're going to probably go across several different ones. Why? Because it allows you to get the same results or good results with less risk. And so why would you go into all into one on the insurance or on anything else, right? All your eggs in one basket is a way to have, an omelet, but but nothing else afterward. And so, having that
Uh,
ability, I think your point of it being so flexible is really great. And it's just sitting down and figuring out where that slider sits in what's most
yeah.
appropriate to you and to your point on what you can afford. Because if your insurance is strapping your cash to a point where this life that you're trying to protect, you actually can't live it anymore because you're paying so much towards insurance, then somebody probably oversold you that. But, and then we get into the whole conversation on the other end when
Mhm.
there's the very, very successful people who their problem is that a whole bunch of their money is going to the government and they'd rather it not. And that's where it can be beneficial on that side. But for today, just focusing on
Yeah. Well,
there's
that's
no
what.
one answer. It's
Yeah.
figuring out what's the right mix and what's the right
Yeah, and
fit.
that's great stuff. And I've always looked at insurance as it kind of follows you as you go through the stages of life.
Yeah.
So obviously, when you're younger, you got a mortgage and you got kids at home and things like that, and that's a high priority as it should be. And but once you get into later life and you've accumulated assets, and you may have that a final capital gains tax bill. We don't have estate taxes in Canada, but we certainly do have capital gains taxes.
Yeah.
And that final bill, if you've amassed some properties or stocks with that you've had for a long time, you're facing probably a significant final tax bill. So a lot of people will use the insurance to cover that. It's the most efficient and economical way to do that. But that's really good. Another thing I always really like about insurance, or I like to mention when I'm talking to people, is a lot of people, you'll ask them, well, what's your biggest asset? And
Yeah.
understandably, they'll say, well, that's my
Their
home.
house, right? Yeah.
Yeah, that's a big out, and I get it. I mean, that's a major life expense and a major purchase and a major focus of your life. But I always kind of want to open it up a little bit more than that. Whereas people, what allows you to have your life, what allows you to have that house, and that's your income.
Yeah.
And I think ensuring your income is probably your biggest asset, because especially if you're a young professional, you're gonna, even if you're earning 100,000 a year plus raises, you work for 30 years, that's at least 3 million, probably more, obviously, and that's a big asset, and that's the one that gets missed. And I think people should be considering about insuring your income. That's a very important part of it.
Yeah, I mean, you can't do your investing. You can't do all of those other things. You can't put away for the kids' university if you don't have an income. And so making sure that that's still there is really important. And it's you talk about it, going along with your life stages. And I think that is definitely the case when, you're sitting down with somebody and they put together a properly designed plan on this side. And I use the analogy. I know you like the vehicle analogy. I use it sort of similar in that a well-designed insurance plan is a really strong chassis. And so if there's not car people on listening, the chassis is like the skeleton of the car. It's what's there, and then they can bolt different body work on top of that, which makes the car look different and it has all the different things. And so a good plan is like a very strong chassis, and it can be different things over the course of your life. It can be that beater that gets you to your first job, and it's clunk, 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 clunk as you're getting there. And then, it can be the minivan when you've got the kids, and then, the sports car when you're going through your midlife crisis. And then eventually it becomes a hearse. And so this one
Yeah.
product can do all of those different things. That same skeleton, that same chassis is there, but it can change and accomplish those things with you as what you need out of it changes.
Yeah.
And that really is about putting together a good plan that has the most
Yeah.
flexibility. Because I'm a big believer when I do things that, we're all going to have decisions to make in life. And my biggest thing is putting together something that makes people's those decisions their decisions, right? When you have to make a decision because there's outside forces and you have to do it, that's not the greatest feeling all the time.
Right.
But when you've got options, that's a much nicer feeling. You still have to come to the end and make a decision, but at least that's on your terms and
Hmm.
under your control.
Well, and as insurance advisors, we provide people with the information and to make the best decision for themselves. And we do, at the end of the day, we absolutely want them to make the decision.
Yeah,
It's not one is better than the other. It's what works best for you, and we will introduce that and talk about it and explain it. And but we really want the client to make the decision at the end of the day as to what they
yeah.
feel is best for them going forward. I love your chassis analogy. That's a good one. I hadn't thought about that one, but
It's yours for a year. You can use it for a year and then I'm taking it back.
then okay, I'll pay you royalties
I'll
on
rent
that
it to
one.
you.
Yeah,
Yeah.
okay, no worries, no worries. Yeah, as long as it can be a 70 Dodge Charger or something like that, I'm good. I'm good.
Whatever you want it to be, right? Like that's the beauty.
That's the beauty of it. And one other thing I just kind of want to throw out there is a lot of people will have insurance through their group, through their employer, which is
Yeah,
great. Nothing wrong
yeah,
with that, and take advantage of it. And if you can buy extra, absolutely, because it's very inexpensive. But they'll think that that's all they need, and
yeah,
that's back to our little comments about ensuring your income. If you've got $300,000 of group coverage at work, that again, that's great. But 300,000 is not going to replace your income for the rest of your working life.
yeah,
And so you want to take advantage of that, but it's important to have your own coverage on top of that. Make sure
yeah,
that you have enough for your family, regardless of term or permanent or group coverage through your employer or your own. You want to make sure that your family is adequately covered. And it's when you think about the insurance in terms of making $3 million and your group coverage is 300,000, well, that's only going to replace 10% of your lifetime income,
yeah.
and that's not going to get the job done. And unfortunately, that's gonna leave your family a little short. So anyway, I just kind of wanted to mention that, and things like that. Yeah. Go ahead.
Yeah, yeah, no, like group coverage is awesome, right? It's
Yeah.
cheap.
Yeah.
You don't have to go through a medical. It's fantastic, but it's a start, right? To your point, it's generally replacing 1 or 2 years of your salary, and for some people that's enough, right? But for a lot of people, when I sit down with them and have the conversation, they're like, no, that's not going to cut it in terms of helping make sure my kid can go to school, maybe go to grad school or whatever
Right.
else it is that they want to happen if something were to happen to them. It's not enough. And so it's a great base, but maybe you want to top that up. The other issue that I see with it all the time with people leaving and changing jobs a lot these days, or lots of people trying to go into business for themselves, is when you leave your company, that coverage doesn't come with you. And that can be really tough, especially if you are relying on just that and then your health changed or something else and you're not able to get it. So going and talking to somebody and making sure that either that is enough for what you want, or if you do need more for what you would want to happen, to going out and getting a coverage that will follow you wherever you go and that really is yours and that you have more control over it. The other one similar to that I know comes up all the time is sort of bank owned mortgage insurance.
Mm,
So you go in and
yeah,
get your
for sure.
mortgage and the bank's like, well, if we're going to give you this mortgage, you need to have insurance. And here's this one. And you're like, oh, that's really easy. Like I just signed on the dotted line and I'm done. Okay, perfect. But that is again a baseline. It's better than nothing for sure. But the biggest two issues that I have with mortgage insurance, bank owned mortgage insurance is one, you well, I guess there's three. One, it's more expensive than if you went out and got it independently, which is funny. The other is that you pay the same premiums or you put the same amount in. It has the same cost every year, but the amount that it actually pays out goes down as you pay off your mortgage. And so paying the same for getting less isn't a great deal for a lot of people. And, it's really designed to cover the bank's butt, not yours. It's to make sure that they're not out that money. Whereas if you get something independently, not only is it less expensive, but as you pay down your mortgage, you still have the same coverage. So that can go towards other things. That can go towards topping up on what's on your group coverage. That can go to replacing your income. It can go to, paying for a big party for everybody on your block when you pass away because you weren't the greatest neighbor, like whatever it's going to be. Again, those are the decisions for the people that
That's
you leave
that's a
behind
great
and
one.
giving them that control.
Yeah,
Um,
that's a good point, and it's about ownership of the
yeah,
product. And I know people don't
yeah.
think about owning or ownership of life insurance, but
When you
to
say it like that, it makes me think of uh, the Charlestown Chiefs, who
oh.
own the Chiefs. A little slap shot for you.
Exactly. Oh, one of my
Some of
favorite
your viewers
movies.
might be too young to to know
Famously,
Slapshot, but hopefully they do.
oh, it's a classic. It's a cult classic for sure. And as Canadians, hockey is a big part of it. But
Yeah,
so that's a great one. But yeah, it's really about, the group coverage that you have through your employer. Again, great stuff. Take advantage of it. But you don't own it. So if you leave that
yeah,
company or that company leaves you, you're that coverage is gone. And if your health has changed where you can't get your own insurance in the interim, and then you go to work for yourself and you try to get insurance, you can't, then you're kind of stuck without. So it's better to look after yourself. And when I say ownership, it's really about, you being in control of
yeah.
your insurance plan. And that's what it's about. Same with the bank stuff, as you mentioned. I'm glad you brought that up. That was a great point, because if say your mortgage is 500,000 and you're paying down your mortgage, of course, which is what you do, what you want to do, and say somebody passes away when there's 200,000 remaining on the mortgage, well, that bank mortgage coverage will pay off the 200,000, but what happens to the other three hundred
Yeah.
thousand? It's gone. You don't get it. Whereas if you had your own policy for 500,000, and that same scenario happens, well, you use 200 to pay off the mortgage, and your surviving spouse would have the other 300 to do what they want. And also,
Or you could even just continue to lower your coverage to be in line with and at least then you'd be paying less for it, right? But again, that's your choice on what you want to
and
do with it. Do you want to have the extra coverage? Do you want to have the extra cash in your pocket?
yeah, and
Which
and
you don't
that's
get that choice when you go with the
that's
bank.
that's the ownership thing too, whereas you have the control and you can do things like that. Or
Yeah.
if you paid off your mortgage and you still want the insurance, you can keep it. Or if you don't want the insurance after you paid off your mortgage, you can get rid of it.
Yeah.
So you're the one that's driving the bus, so to speak,
Yeah.
and as opposed to the bank or as opposed to your employer. So those are great points to keep in mind for sure. And I love the reference to the to Slapshot and Charlottetown Chiefs. Yeah, that's good. So,
Yeah, we want to
well,
make sure that people don't have to go through the box and feel shame.
yeah, exactly. Well, a great inaugural little fireside chat, Graham. I appreciate your time and your input, and always good to catch up with you. And we'll do this again real soon. So, thanks everybody for listening, and make sure you join us next time. Take care. Bye for now.